Hey everyone, welcome back to Corporate Dakota, the place where we break down the complex world of business and finance, and sometimes a company's stock just decides to take a little detour off the main highway. Today we're diving into a filing from Longevity Health Holdings Inc. This report tells a story about a company facing a bit of a crossroads, specifically related to its stock market listing. So what exactly happened here? Longevity Health Holdings Inc. got some news from the Nasdaq stock market. Basically, they weren't able to meet certain rules that are required to keep their stocks trading. On the Nasdaq capital market, think of Nasdaq like a prestigious club, and if you don't follow all the rules, well, you might have to find a different place to hang out. And that's precisely what happened. On September 10th of 2025, the company was officially notified by Nasdaq that they would be delisted. This means their common stock and their warrants, which are like options to buy stocks, would no longer be traded on Nasdaq. The actual delisting took effect on September 12th, 2025. So if you were an investor looking at these stocks on Nasdaq, you would have seen them disappear. Where did they go? They transitioned to the over-the-counter or OTC markets. Now, the OTC markets are generally for smaller companies or companies that aren't meeting the stricter requirements of major exchanges like Nasdaq or the New York Stock Exchange. It's not necessarily a bad thing, but it means that the stock might not be as easy to buy and sell, and typically has less public attention. They're saying it's not expected to affect their day-to-day business operations, and they'll still be reporting to the SEC, which is good. They hope the OTC provides enough trading activity for people who own their shares. Let's look at what was actually trading. They had their common stock with a very small par value, which is just a nominal value for accounting purposes. They also had redeemable warrants. Now, these warrants had a pretty high exercise price of $345 euro. This means that to actually turn these warrants into shares of stock, an investor would have to pay $345 for each share. For a company that's being delisted from Nasdaq, that's a significant hurdle, and it makes you wonder how many of those warrants are likely to be exercised unless the stock price goes up dramatically. So while the Nasdaq listing might be gone for now, the company has a plan. They're still intending to proceed with their previously announced merger with True Health Inc. And they aim to have the combined company stock listed on Nasdaq again. That's a pretty ambitious goal after being delisted. Scroll on September 10, 2025, Longevity Health Holdings Inc., a Delaware corporation, the company, received written notice from the Nasdaq stock market, LLC Asante Scroll. Scroll, this situation highlights the challenges companies can face in meeting the ongoing requirements of major stock exchanges. It's not just about getting listed, it's about staying listed. They need to maintain certain financial standards or business operations to satisfy these exchanges. Scroll, emerging growth company toolsets. It's also worth noting that Longevity Health Holdings Inc. is identifying as an emerging growth company. This means they are probably a younger company and are allowed to follow some different, often less stringent accounting and reporting rules compared to more established companies. They also have the option to delay adopting new accounting standards, which can sometimes provide a bit more flexibility. Scroll, buyers Rajiv Shukla. The report is signed by Rajiv Shukla, the Chief Executive Officer. He's basically attesting to the accuracy of the information being presented. Now, looking at this entire situation, there aren't any detailed financial tables in this particular 8K filing that give us a deep dive into revenue, profit, or loss. This filing is purely about the notice of delisting and the company's immediate plans. However, the fact that they were delisted from Nasdaq strongly suggests that they were not meeting the financial listing requirements. This could be due to a number of reasons, such as a stock price that fell too low, not having enough publicly traded shares, or failing to meet certain profitability or asset thresholds. From a strategic perspective, the company's intention to merge with True Health Inc. and relist on Nasdaq shows a clear ambition to regain a more prominent market position. However, the path to achieving this is challenging. They need to demonstrate significant improvement in their business and financial health to satisfy Nasdaq's listing requirements. The transition to the OTC market, while a temporary solution, could impact their ability to raise capital in the future and might make their stock less attractive to institutional investors. The risk here is obvious. Delisting often signals underlying business or financial difficulties. While the company expresses optimism about the merger, investors will be closely watching whether they can execute this plan and meet the stringent requirements for relisting. The high exercise price of the warrants also remains a point of interest. If the stock doesn't see a substantial and sustainable increase on the OTC market or after a potential merger, those warrants are unlikely to be exercised, meaning no new capital will flow into the company from that avenue. In conclusion, Longevity Health Holdings Inc. is at a critical juncture. The delisting from Nasdaq is a significant setback, but their stated intention to merge and relist shows a clear path forward, albeit a difficult one. Investors should approach this situation with caution, paying close attention to the progress of the merger and any further financial disclosures. It's a classic case of a company navigating a challenging market environment and aiming to engineer its way back to a more stable footing. What's your take on Longevity Health Holdings Inc. situation? Do you think they can pull off the merger and relisting on Nasdaq? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more of these deep dives into corporate filings. We also have a Discord community where we discuss these topics further, so check that link in the description. Thanks for watching, and I'll see you in the next one.